All right, showing innovative here, and going to go over the simple, easy Kiss order flow strategy. All right, so what we're going to do first is open up a new chart. I'll grab NQ. All right, and what you're going to want to do is make it a Heikin-Ashi chart. All right, you're going to bring it to being a tick chart. We're going to bring it to 300, and we're going to click tick replay. Okay, now let's see. That should be all we need for this right here. Okay. And that should bring us this right here. Okay. So now you have your basic Aikanashi tick chart. Now this is me scrolling my wheel back and forth. All right. Now I'm gonna grab Kiss order flow. That's what we need for this strategy. Okay, here we go. And we're gonna hit hide zoom in instructions. All right, you can leave the candle colors, that's fine. Uh value areas, that's fine, and balances, whatever you want to leave, it's fine to leave. We don't need any of these. Absorption, you want to have absorption there. And then track traders, you don't need. Bulldozers, you don't need. All right. And then surge bars, leave those because they always give you a little inkling as to who's stepping into the market. All right. And then what's here, support and resistance. Want to add that and increase the opacity to 5. All right. On just the two main ones. The broken bands, you can leave them where they are. And then, of course, I remove that. And then I use one other tool. Here's Pat's toolbar. Is from price action indicators. And what I like about this one is as I scroll my wheel, it allows me to uh, adjust and move the charts. And then I can also drag some drawing tools right off of it. So there we go. Let this load up. And here we go. Beautiful. So you have our support and resistance bars, all right, until they're broken, they're brighter and more out there. There's a reason I have them brighter, okay? Now, this is me zooming in and out now. You can see it's a little bit different. We're able to utilize it a bit better. Let's get to this section here. Let's see, a little bit more. Yeah, there we go. Perfect. Now I should be able to explain a little bit more about the bars and how we utilize them. It didn't bring my arrow line up. Okay, well, I'll grab one here. Okay, so you have your basic support and resistance bars. All right, this is a red bar on a down. This is a down bar with a red zone. Okay, that's the sellers moving the market down. Over here, you can see you have a green zone off of an up bar, a bullish bar. All right, it's the bulls pushing the market up. Now, those two are the typical ones you're going to see. See, you have green pushing up, green pushing up, green pushing up, red pushing down, red pushing down, red pushing down, and so on. Now you have two other ones that are not typical. A green on a down bar, at the top of a down bar. Green on the top of a down bar is typically the buyers getting trapped. Okay? You're at an extreme where the buyers in the auction has completed. Here you have red at the bottom of an up bar. Same thing. Okay? If we actually look here, the market still did come down, but most chances are that this here is a transition. So just things that we're cautious for within this strategy. Now, strategy is relatively easy. You need a target, and the trigger is going to be the zones. The targets are going to be the zones. You front run the targets. Okay. So let's look at this here. This section right here. Oh, perfect. Okay. So it's 9:30 in the morning right here. Figure, give it a few minutes, and then right here, you could start. If we look, you have a, let's zoom this over. Let's move this chart over. All right. So you have a red zone right up top. We had a green zone print. Okay. You say you wanted to start here. You have a target clear above. Green zone prints. Let's start with this one here because it gives it more of the basic of how it works. We look, this is the bar that it printed from. Okay. We're going to front run the area. And depending on how much you front run, this might have missed and would have caught it a little bit later. All right. But that's the premise of the strategy. You have a green bar that prints, so pushing the market, and you got a target to go for. All right. Now we're up here. This printed, but this was a trap. You want a red bar for you to push down, not green. A red zone for you to push down, not a green one. All right. So you had a red zone here, but you had a green zone right here. So your target is really close. You want to make sure you have a decent risk to reward. Okay. Here you have a green zone that printed, decent risk to reward to get up there. Now your target is there. All right. Now, since your target's there, your stop is just below. Okay. So let me put this so it's crosshairs. All right, there we go. All right, so that's what we're looking for. So you have a basic risk to reward. You can even put it just under the zone, but I usually go for under the candle, give it a little bit of room. Okay. Now, looking here, we had a red one print here with a green zone here. Not much room. Okay. So since you don't have much room, you know, this is where discretion comes into play on how aggressive you want to be. But rule of thumb, make sure you have a decent amount to play with. This was pretty much almost a 1-to-1. Okay. Now we came up. We had another red zone here. No green printed. No big deal. Had a red zone print right here. We have a green zone all the way down here. All right. This is where I'll utilize paths to draw a line. And you could utilize in NinjaTrader just like the horizontal line. That'll work too. Just draw a horizontal line. There you go. It can be moved around any way you want, to go to different zones. Let's remove that. Okay, so from here, we have a zone below us. Take it. We're looking at it right from here. Market comes down. We have this other red zone that printed. You could have moved your stop to just beyond that. All right. Typically, it's going to go to the back of that candle of that, which would have been here, but you could have just went right to the zone. Either way. For risk management in the system, you have an opposing zone print. That's an exit. So this printed going up, you get out. As the market started to transition the opposite direction. You had a green print, too close to a red, don't do anything. You had another green print, we have no red above, don't do anything. Red printed, not too much room, once again, at discretion. Now we're here, we have plenty of room to get down. That's a nice trade, right? Have a green at the top. This here is where we have a flip happening in the market. You had sellers here pushing the market down. Buyers here got trapped. The buyers are recovering right here, pushing the market up. So when they recover, right over that zone, you got to move. But another green here, nothing to go for. You had a red push, but you're already in a green zone. Okay. Since we're making lower highs, you know, we don't have anything with the system giving us that next move down. Okay. If you would have gotten in here, you would have been stopped out. You have sellers with buyers that were holding it here, and these sellers needed to push through. All right. But you are already at a zone. Here, see if there was another zone below. There is. Okay. So let's draw our line, create a cross. Okay. And draw another line. This one I could tell hasn't been hit. Doesn't matter. Okay. So now here we have a zone below, and we had a red print. Red prints, we get it. Trailing the stop. Right here, we had sellers get trapped. Close. All right. You have the opposing side printing a bar, printing a zone. That's time to get out. Here they printed, and this would have been a stop. Okay. And that's it for the basics of this strategy. Okay. Now we have absorption. Absorption gives you hints and clues as to what's going on. We're coming down. We got absorption here. So you had sellers selling into passive buyers, and then you had a bar print. Just told you what was going on with the auction. You got up here. You had a little absorption. You had more little less absorption up here at the top. Okay. You could utilize those as signals to help you when you're in a trade. Okay, right here, you were in. You seen the absorption up here. You could have brought your stop down. Then you had the zone. Brought your stop down. Seeing what was going on here. Knowing that there's a zone down here. You could have just left your stop there and seen what happened. Okay. At that point there, you would have been in a good position. But be more on the cautious side. We want to grab what profits we can and then move to the next trade. This one would have been stopped. And then this one would have finished the job. Okay. You have this going on up. And there you go. They're trapped. You had a green moving here to go up. Goes this green bar here. They're getting stuck. So you're out. Okay. You have the zone all the way up here to get to. This was coming down. I think there was another zone below. But you guys are getting the idea. Look at how well the strategy worked. Okay. Now this is just from the open till 10:30. That's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 wins, one loss. All right. Um, but you have to remember you're hitting market orders to get into this. You're really not able to trail behind the candle too much to get yourself in with a limit order. So you have a little bit of slippage that'll go with it, but You see you have room. As long as you have room for the trade, you're good to go. Okay. Uh, this is, since you're always looking for a target, more of a uh, rotational market strategy. We had this here, so we weren't doing anything. We weren't doing anything. Even though you had this cell come all the way down from the bottom, and this here, and it shot up, we had no really clear targets. You saw where these were stuck here, and that's where the market kind of brings us. Had a little bit of a choppiness right here, moved on back down to here. Now see how this moved back down? That very easily could have happened right here. All right, it happened at this zone, but it could have happened right here at this zone. Same thing up here. It didn't get to this one. It got to a little bit past this one, and we had a reversal. But let's look at that reversal. Reversal happened. We get from here. You didn't move your stop yet, and you're right here. Right from here to there. This we didn't do anything because this printed after this one already hit the target. Of the green, right here to the red. You really wouldn't take that because it's very short. You're going for the first target. Okay. So this here, printed here to there. Voila. They're stuck here, so there's nothing to do, until here. Okay. Now you can see there's no other indicators, no EMAs, no utilizing any other side of support or resistance, no VWAP, no nothing. It's just utilizing this is support and resistance for getting you in, getting you out, and watching the auction. Right, this here was an entry. Actually, one down there was an entry too, but this here till there, still a winner. This one here, well there, still a winner. Okay. Do some of them get a little nerve-wracking? Absolutely. But it's the way that the trades go. This one printed this here, but you were just getting out, so you weren't getting back in. This printed was too close. Let's see. This one printed here. You have a stop. See, do we have anything else that would stop us out earlier? Nope. This one front run there. Voila. And as simple of a strategy as that is. One here printed. Try to go down lower. And that was something that we got stopped out at. Okay. This pushed lower. And the market started to flip around. And there we go. All right. And that's it. So all you need is to utilize the support resistance on the Heikin tick chart, and that's all the system requires. All right, that's it. Here we're in a bit of a chop here. That was at end of the day here. At the end we had this other little run. Let's see. Finally broke out of this little bit of a chop. This was more of a flag that happened right here. And wrong, wrong one. On this flag here, went right to there. There we go. Then we had a print here, straight on up. 43 points there. And this is at the close here. Okay. There we go. Now you're at the close and you're done. That's it for the whole day. You did rather well. This choppiness here, you would have gotten beaten up a little bit after these first two here and seeing how it was going. That's a little bit of nuance of it all. So we know that this was down here, so let's see, you had to, this went to here, you got out here. This one pulled to there. Let's see if you got any down here to there. Okay. Would have been going up, but if you're looking, you're seeing the markets making lower highs. I mean, higher lows. Okay. Seeing this here, to go up there, could have given it a try. But that's a larger Cerulean, could have given it a try. And then this would have been pretty, not even that bad. 10 points. Okay. And you had this cell here going from there. So, in actuality, uh, yeah, that one would have stopped out there. So that would have been done and it would have been there. All right. Go for the whole day. 1, 2, 3, 4, 5 stop outs. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22 opportunities to 5. So 80% win rate. All right. And pretty easy and pretty clear and not needing to overcomplicate anything. All right. Hope that helps you guys and have a good one.